Welcome,
We're,
Dan. We made it.
we're here. We made it. It's my fault.
No, actually, it's not. I'm sitting here. I got it. Well, we were kind of messing with how to simulcast both on your channel and my channel this morning, and we got through that, and I was all happy. And good morning, Jackie. And
Hey, Jackie.
I didn't send you the damn link.
Well, you know what? For some reason, you're on the other side of the country. So many times when I'm on with you guys or people from California, my time zones get all screwed up, and I'm like, where am I supposed to be, and when am I supposed to be here? So, thanks for having me.
It's rough. I was traveling back from Washington State, and there's a couple spots where the phone time just changes in Idaho.
Yeah,
you're in Mountain Time, and then you're back in Pacific Time. It's like, you know what? I'm traveling. I don't even care what time it is. But welcome. Gosh, it's been a while.
Seriously, how you been? You've been traveling all over the world, and I'm sitting here working my butt off.
Well, there were certain times where I was working my butt off too. That's the nice thing about being able to work online like that. So, but I wanted to talk to you today, Dan, about debt, because it's making the headlines, and I thought it'd be fun. I pulled up this debt clock. You've seen this before.
Oh, I do that all the time, and it makes you sick.
So our debt per taxpayer now is $254,961. Will you be writing a check anytime soon?
Oh, yeah. Here's what I made a comment on a video last week, and after I did it, I was like, it came across wrong. And basically, what I did is I pulled up the debt clock, and then on the same day that the Biden administration said that they were issuing, it was like $6 billion or something like that to Ukraine. And my comment after I said it and I posted it and everything, I'm like, I hope people don't take my thought there was, guys, we just keep sending money and spending money we don't have. And I didn't mean to take it out on Ukraine because they're in need. But my whole point was, you imagine having a credit card and you can every day you keep spending it and you never have to pay it back. That was basically my point in some of that. So if any of my viewers are out there watching, it wasn't a bash against Ukraine, by no means. It was basically we spend money like drunken sailors, and now we got another debt ceiling coming up, and you're going to hear that all over the headlines for the next 30 days. And it's just political pondering it really ticks you off. So.
Yeah, they're not really going to do anything about it. In fact, here's some of the devil in the details here too. Is right now our number one largest budget item is Medicare and Medicaid. Yeah. So young men like me. Then it's Social Security, and here's defense, $794 billion.
Yeah.
But look at what's happened all of a sudden, though, Dan, because of our rates going up. The interest on the debt is almost as high as national defense.
Right. Yep.
Wow. Now, we can debate till the cows come home what we're going to do about Medicare and Medicaid and Social Security, and hopefully they'll have a serious conversation about that. But that's where it's at. So, when we look at debt, the one that sticks out to me the most right now that's really making it skyrocket is the interest on the debt.
Yeah.
So when we look at the Fed chairman, and I hope he talks, and I'm going to show you another number on here too. When he talks tomorrow, will he address it? And in our little bubble of real estate, we look at interest rates and we look at central bank raising or lowering rates, and we think that it's just all he's looking at is housing.
Right.
That's not the case. I mean, they're all going nuts staring at this debt clock too. And so does he have to make a move to keep that interest on the debt from getting any worse? Because right now, and I know you know this, but look at the percentage of our debt to GDP right now.
Oh, it's nuts.
122%. And back in 1980, when everybody was screaming at Ronald Reagan for running up too much debt, it was 34% of GDP. So that is scary. Now, to put it in perspective, I think, isn't Japan somewhere at 500%?
Yeah, you hate to say it this way. I'm glad to say it this way. A lot of basically every other place in the world is in a lot worse shape. Well, not everywhere. There's so many countries out there that are much, much, much worse shape than we are. And yeah, we're freaking out about, 7% mortgage rates, where you have a lot of countries out there that their rates are sky high. And then Canada is another example. Their mortgages are basically 5-year terms. So they have to refinance every 5 years. So you imagine in our economy, especially with, my rate is 2.625 on my house. So I'm one of those existing home buyers or sellers or whatever. I'm not doing either, because it's like, even if I downsized, my payment would go up,
Yeah.
So, I'm at 2.625. If I go to buy a smaller house at 7.25, that payment's going to go up. The other thing is, and these are all areas that get me in hot water. If you go back to that chart, student loan debt. Now, student loan debt, it scares the bejesus out of me, because they're not doing anything to fix the cause. I get in debates with people, and we get in some heated arguments every once in a while. And, I'm against the student loan forgiveness, and we can get into it. And, I'm not on the, you didn't have me on here to talk about the student loan debt, but the student loan debt that just kicked in. I did a video last night, and I posted it. There's 43 million people, 43.5 million people with student loan debt. The average payment's $500. So that puts you out about I forget what the number was, 21 or $26 billion a month that is now going out to student loan debt that we didn't have last month or the month before or the month before or the year before. So if you actually start looking at that alone, it's going to pull out $20 billion in, that money was used last month and the month before for shelter, food, recreation, all this other stuff. Now it's going to go to student loan debt. So, you just showed how much, of a deficit we have already. Do we forgive all this stuff, and then it eventually gets paid? But I think you need to cure the college system first. It's like the subprime loans. They eliminated those. They eliminated them when the market crashed, because it was just a complete shit product. And now they have the colleges still jacking up all their payments and their tuition, putting in, $800 million sports facilities and everything. Why don't you just use the money to bring down the cost, or at least put caps on some of these things where they can't run rampant? So
that's the thing that I've been shouting from the rooftops for a long time too, and probably more privately than publicly. But what is the incentive for colleges to reduce their costs when the money is so easy to come by?
Right. Yeah.
So they can borrow money to go to college at exorbitant amounts, and they're not even thinking about it. Oh, 20 grand. Oh, what the heck? Yeah. And then, so the college, I went up to NAU a few years ago and toured their gym, and their sidewalks are heated so that, you don't have to walk on ice or snow. Oh. And I left there and I thought, these colleges have no incentive to cut costs.
Yeah. My son played college football at a D1 school, and you walk into these facilities and it is like the Taj Mahal. It is unbelievable.
Yeah.
And then you see the tuitions keep going up. And then, my rant on this is, and we won't, maybe we don't get into the student loan debacle on this event, but but basically my point was, now that those payments are starting back up, that's that much money per month. It's not going into goods and services and shelter and recreationals, and things. That money is going to go to the government for the student loan debt servicing. That's $20 billion a month. So that alone is going to start really driving down how much people is going to buy. So that in turn is going to drive down inflation. We see the shelter numbers of inflation. I know you're a geek like me on all these numbers. The housing numbers are actually almost turning negative year over year. So you have that coming in. And then the jobs, jobs there aren't as robust is everybody, it's a political year coming up soon. The jobs market, if you look at the last 3 months, we haven't even added 150,000 people to the job force. So things are starting to crack pretty big and faster than a lot of people are expecting. So
I think there's a few places they could have added jobs. Like, I can't understand the ferry system that takes you from one end of the bay to the other in Seattle. Why all the boats aren't running because they
Yeah.
don't have enough staff. Why I had to wait an hour at a restaurant to get a seat because they said they're short of staff. The
Yep.
fish department at Safeway was closed because they're short of staff. It just makes me shake my head.
Yeah.
I wanted
So-
to show you another number here that I
Yeah.
don't think a lot of people see here. And I find this very interesting. And that is US M2 money supply. That's money in circulation, right?
Yes.
Now look right here.
It is plummeting fast.
It's going down quickly.
So
So
here's-
that is one of the main goals of the central bank.
Yep.
Is to
So do me a
pull more
favor if
money
you
out of
can.
circulation. Here it is.
Do me a favor if you can. Pull up the consumer disposable income. You can just Google it, and then it'll give you, it'll actually bring you out to I think the St. Louis Fed.
Okay.
And this is what I've been arguing for 2-3 years. And I've had many people just blackball me on YouTube because of, things that I say and it's controversial and all this, but it's all coming true. Hate to say it, back.
Consumer disposable income.
Yes, sir. And I'll explain why my position has been my position over the last couple of years. And anybody that does watch me, I'm kind of I'll say I'm not a cheerleader for real estate. Does everybody need to buy real estate? That's debt service. Is there one for consumer? Not as a percentage of just consumer disposable income. It should give you a chart that basically you can see from 2020 to 2022-ish. The biggest spike in our consumer disposable income ever in history.
Consumer expenditures, chain type price index. Which one do you think here? The
It-
personal
it-
consumer consumption?
Yeah, try that if you would. But it should be, nope. Personal consumption expenditure. Just try to Google it one more time. And if I could see what's showing up on the thing. Sorry, folks. We were trying to do a video today and I messed up the times. No, just consumer disposable income chart.
Talk amongst yourself,
No,
people.
not even personal. Just consumer disposable income.
There we go. Here's Fred right here. This should be
try
it.
that. Yep. You'll see what I mean. Okay, so if you could kind of click the 5-year chart on that thing, you could click it right up above the spike, right up a little bit, up a little bit. Nope, keep going up. There's going to be, you can condense it to a 5-year. Yep. Okay, so here's what happened, and here's what a lot of people didn't understand, and I had people telling me I'm crazy and all this other stuff. Here's where disposable income was. This is how much money you and I have in the bank and in our pockets and everything. If you looked at that time period back from 1965 going forward, it's always been a slight little increase. And then all of a sudden you see these spikes and you're like, okay, that means more people, we had more money in our banks, personal, you and me had more money in our bank accounts than ever in history. It spiked exponentially, and then it came right back down. Let me explain what happened, and then we can put a lot of this into perspective. So what happened is I've been saying for once all this stuff started happening, there was what was called forbearance, where you didn't have to make a mortgage payment for 2 years. Okay, so that was fantastic. And then you had the student loan deferrals. You had those from the pandemic all the way up till just this month. So now you have most consumers, people that own a house, most of them had a house and they had student loan debt. Okay. Now let's think, even in my case, I had 3 kids go to college. I still owe on one of them. But if I didn't have a mortgage payment or my student loan debt, I'd have a $300 house or car payment. That would be it. So you could see how if I'm not making those payments, and I'm also continuing to work at my job. A lot of people did. A lot of people got stimulus money and everything, and I get flack for that. But that chart alone showed how much money people had, way too much money in their accounts than ever in history. Well, as a society, we don't save, so we spend the stuff. And we spend and spend and spend. At the same time, we had a supply chain issue. And we had no production being done at the production level. So you have all this money chasing too few goods. And I also said it was going to be transitory because I'm like, okay, once the floodgates opens up, everybody's going to run out of money, as you're seeing right now. And, it's going to basically curtail a lot of our spending. Well, not thinking that, even at the gas pump, we're getting hosed. When oil prices were $60 a barrel, gas prices should have been $2.99 like they normally would be. Here in Illinois, they're $5. So if you analyze that even, the oil companies are hosing us, and this was giving also a lot of companies the opportunities to raise their prices. And you can see that in the earnings reports. And that's why the stock market is going nuts. So you have all this money going out there chasing fewer goods. But now the moratorium on the forbearance on mortgages is gone, and it's gone for about a year. So that started, hurting people in the pocketbook. This student loan thing is going to be bigger than a lot of people expect. That's why I'm hoping that the Federal Reserve stops doing what they're doing, because this alone is going to really put a damper on our economy. And I'm usually the cheerleader of, things are going really well. This one is starting to really scare me.
Well, when we look at the debt, the overall debt, and it's been climbing forever and everything. So how much of a factor is, and I think it's a huge factor, is that for the future of mortgage rates over the next year or two? I mean, because we're looking at our fourth largest expense right now is interest on the debt. So is that going to be a catalyst for the central bank to say, we need to pull back, or bond traders going to look at this and say, is there going to be any relief, or are mortgage rates stuck in a channel to continue to go higher? Because
it's a great question. And the tough thing is, I don't know, and they don't know. And we're running into an election year, so it's going to be all pointing fingers. Nobody's going to do anything. I saw what was it, 2 weeks ago, the first Republican debate. I'm like, this stuff's starting already? Are you kidding me?
Yeah,
we got a year and a half of this stuff to go.
I was traveling and wanted to be happy, so I didn't watch it.
Yeah, I know. But it's a weird environment. And the tough thing is you have a lot of analysts coming out saying, here's what's going to go on, and we've never been in this position before, ever.
I was just going to say that.
You don't know. Here was my take on housing. Now, my assumption was I didn't think we'd have a crash in prices, and that's still holding up. You still have those out there that are saying the world's going to end, the markets are plummeting, this and that, and they've been preaching that since 2021. So we're 2-3 years into that cycle. I knew though that the volume of housing, and you're seeing it, and that's what you post all the time, is there is truly no supply, folks. However, like areas, here's where we're really picking up. Our major business used to be Arizona, California, Texas, Florida, all the areas that you would assume would be growing, where the people want to migrate to. If you're working a remote worker, you want to live in a nice area where it's warm and all this other stuff. But right now we're starting to see the Midwest, like I'm in Chicago, house values they're steady and growing like they always do. So we're now getting business. We probably get about 20 applications a day, believe it or not, of, now it's Oklahoma, Alabama, Arkansas, Ohio, Pennsylvania, Indiana. We're not getting as much traction in Texas, California. The house prices are crazy. If you have a house that's priced, anywhere in the country other than, you take half the country, west, they're having trouble. You take half the country in east. If you have a house at $250,000, $300,000, there's bidding wars. And a lot of people are saying, no, there is. Here's a list of clients I got today that were waiting on contracts. There's 15 of them, but most of them are there. We're still waiting because there's bidding wars. So our average loan went from, 400, 500, 600,000 to like 220,000. So the dynamics are just shifting.
Have you ever seen this much waiting in the industry?
No, never, ever, ever. Even back in the crash. No, I lived through the 90s, early 90s, when rates were 16, 18%. I lived through, a couple crashes. I lived through the 2008 through 2010 crash. At that time, I tell you what, our borrowers were still lined up at the door. They wanted loans. They wanted, people were bottom fishing for those houses and everything like that. Right now, I get it. It's really hard to afford a house, because house prices keep going up. But, just because house prices went up doesn't mean they're going to crash. What causes a crash in prices? oversupply of a something. It could be a widget. It could be anything. You go to the store, after Halloween, a week after Halloween, they're giving the candy away because they have too much of it and it's taking up space. So, so the supply demand is just, supply went way down and demand went down as well. So you haven't seen that, plummeting of prices because there's just no homes out there.
Well, the only number that matters in your example of candy is great, is the difference between the two, not how higher prices, how low are sales. What's the gap between the two of them?
Yeah.
And you can see the numbers that I have below. It's saying we got 3,400 new listings coming on and 2,500 went under contract at 74%. That's healthy. Right. Both numbers are excruciatingly low.
Oh, it's crazy.
But they're not moving. We're still in this really narrow channel. The other thing that's changed here too, Dan, I want to show you real quick, and that is, and you're probably feeling this more than anybody, home purchases are falling through at the highest rate in almost a year, 15.7%. People getting in, got to buy a home, and it's fallen through either because of inspections or they didn't have their rate locked, or for whatever reason, that number has spiked up. So agents have got to be letting their buyers and sellers know, look, the fallout rate's been pretty aggressive here. So don't dig your heels in as much as you think you can.
Well, I had a buyer last week put offers on 2 houses and backed out of both of them.
I hate it when that happens.
So it's like
it's a waste of time for everybody.
You got pre-qualified, and I get it once you see the numbers, but normally the first process is they get a hold of us. We provide the financing. I'm a mortgage advisor, licensed in all 50 states. So we go through the numbers with everybody and all that. So there are still people out there that can buy houses. When you have, what drives me nuts is the blanket statements of, the housing market's crashing, prices are going to plummet worse than 2008, 10, all this other stuff. If you ever watch on my channel, people post that all the time. I always respond by, great, that's fantastic. I would love to know where you're getting your data, because all the data I have is, yes, we have, like, Austin, Texas is down, I think 10% this year. They're taking the biggest hit. Then you have Southern California. But again, Illinois, we're up 4.4% this year. So, and if it's business as usual. You have a job, your rent stayed steady, all this other stuff. So we all feel the pinch. If you're looking to buy a house right now, you're feeling the biggest pinch. If you're not looking to buy a house, like in my situation, I have a house and I have everything else. Unfortunately, my income is based on this entity. But if I had a job, I was making, steady money and whatever, my life wouldn't be changed at all right now. I'm perfectly set with my house. Everything else is in line. Yeah, gas prices and other prices are up, but you can't blanket everything by saying houses are too expensive, nobody can buy, because people are still out there making money.
They're still buying. And Jorge's got a comment here that says home affordability is the worst it's been since 84. Something's got to give. Well, probably. The only thing we don't know is how long it's going to take before we see any type of, parity there. I mean, it's highly unaffordable right now. So are cars, both of them, ridiculous.
Oh yeah. Well, like you say in the past,
mean they're not going to sell, and
right.
How long will it take? I mean, Japan, pretty much 15 years of just deflation, and some pretty high unemployment. This could take 10 years to shake out.
Yeah. But the thing is something's got to give, yeah, but you hate to say it this way. I never thought, right now we have people, again, we're closing loans every day. And I'm being honest with you on that. I never thought at a rate at 7.25%. I basically thought the faucet would be shut off, like a lot of people, unless I live with what I do. I see it on a daily basis. We still have, every one of my sales guys probably has 10 consultations today alone with people kicking the tires, seeing, can I qualify? Can I qualify for this program? Do I make enough money? Do I have enough money for a down payment? Things like that. There is still the demand out there because a lot of people, your family situation might have changed. So what I was getting at is, I hate the broad statements is nobody can afford anything. The house prices are going to plummet all over the country and this and that. you have to look at your situation. I tell on my videos every day, I'm like, reach out to a realtor, reach out to Rick in your area. Is it better to rent or buy? You can do the mathematics behind it, but long term, I'm still a proponent of buying. Would I buy in this market? Yes, I would still buy in this market. If I'm looking to maybe move to Florida and retire down there and stay there forever, I'm buying. I'm not going to rent. Okay, but that's me. So I think a lot of people have that. And if you hear the horror stories that I have on a daily basis of people renting, and then the landlord sells the property, boots them out, they raise their rent exponentially and all this other stuff, how there's slumlords out there. They're still out there. You hear these horror stories. If that person could buy a house with, equal payments as they have in rents, I would assume most people would look to buy instead of rent. But what's going to give at what point, I don't know. Or maybe people just get used to, I never thought people would buy a cup of coffee for $7 every day on their way to work. People do.
Well, I describe the market as that line in Princess Bride where Billy Crystal says, he's not dead, he's mostly dead.
Well, you also make comments every once in a while is affordability. What's affordable? What's affordable to you might not be affordable to me.
That's all. It doesn't matter how much money you make, is what is the percentage of the house payment to your income, or your income to the house payment, that number. So either one comes down or one goes up, or you don't buy. And there are points in my career where, gosh, I wish I would have bought that $250,000 house, but at the time couldn't afford it.
Right.
And so a couple promotions later, you know what? I can now. So, it depends on what your income, how old you are. I mean, I was 27, 28 when I bought my first condo, and my only condo. So, I became a homeowner, and then got married, and we bought a house, and it was a stretch. I mean, we were scraping every penny to get into that house, and it ended up being a very good move. It was a pretty cool house in Seattle, but then our incomes kept going up after that. I got a couple of promotions. We stayed there for several years, and then I was transferred to another state, another big wage increase, and that's just the way life went then. There's a lot of that going on still, but the average person sitting back saying, well, I can just never afford it. Well, you might. I mean, your career might take a whole different trajectory. There might be something come your way, or you know what? You might not. You might be stuck here for a while, but the market's not going to adjust because of each one of our personal situations. It's going to make it's hard to look at this at the macro scale and say house prices are going to crash without saying, and here specifically is why. And that's what kind of gets under my skin on some of the crash videos that we see. And that is that, we're going to be down 60%. Well, why? Right. Inventory is going to come. Well, why? When?
Yes, exactly.
I mean, wouldn't we be seeing it now? I mean, if interest rates are 7.29% today, sales are as low as they've ever been in Arizona. Why haven't prices crashed?
And that's what I explain every day on my show. I always try to say the whys. Here's why. It's so easy to say it's going to crash, and people post every day. It's going to crash 50%. Great. Why? Where are you? What's the dynamics behind it? Because here in Illinois, it was funny. I was going to post a video on this. I get updates from people every day, realtors every day in the areas on home prices. Yesterday, I got 3 price increases. Now I can honestly say I've never really seen that, but there were price increases right locally here. And it was just like, I don't know the gist behind it. If they just did something to get popped back on the market or whatever, but that kind of caught me a little bit off guard. But what I wanted to say is, you look at areas, we're getting a lot of business, honestly, from Ohio and Pennsylvania. And a nice house, 250. 260, 280, real estate taxes, $2,500. Then you talk to people out in California, starter house, $500,000, $600,000, $700,000. The taxes are $500,000, $600,000, $700,000, $8,000. I get it. But you're choosing to live there, hopefully your wages accommodate you living there, I guess is the point I would make.
Yeah, and then when you look at regionality too, you go, wow, Arizona, man, the house prices are absolutely nuts. Well, I don't know how you guys live in San Francisco.
Oh yeah,
I
seriously.
don't know how you live in Toronto. Average price $1.1 million
Yeah.
with an adjustable rate mortgage. That one just kills me. So, and again, you brought up something earlier, cheerleader for the real estate industry. We get hit with that quite a bit. But I think I'm just trying to show where the numbers are today. And I'm very concerned about our debt. I think that, the debt fuse has been lit. I just don't know how long it is. I don't know how much longer we can kick this can down the road. Just about the time I think it's time to panic, I look at other countries and go, well, they're 500% of GDP and they're still alive. We're at 122. It's going to squeeze a lot out of our system. So, when the government ends up being the one that needs the credit more than we do, then we're going to get squeezed out. And so, and they can always reverse course and inflate our way out of the debt, pay today's debt with tomorrow's dollars. And so there's a million places it could go that could keep you up at night. And so the only way to really guess is just to keep looking at the numbers and see if anything jumps out and changes. And for me right now in this market, Dan, this is what I look at on a daily basis, just saying, here's the number of homes under contract. Here's the number of new listings. And they're just muddling along. And one of those has to pop. Now, which one's going to pop? I don't think we have any more downward room for sales.
Yeah,
we're already in the basement. Okay. So, I mean, how much worse can it get? Right. So I think this is it. Now, these big dippity doos over here are holidays, right? So when we come up to November, Thanksgiving, Christmas, then yes, this will pop down to 1,500. But it's this one here, new listings, that has to make a major move, and there has to be a catalyst for that. So with all of the grandiose economic forecast and everything, that's the one I look at. If that has to move. And when I start seeing that flying up, like when the rates first started going up, I predicted and said, if all of a sudden we get up to 17,000 listings, I would hurry up and list your home if you're thinking of doing it. Because we get up to 20,000, I think you're going to see prices start to come down if sales stay where they're at. Well, we got about 17, 18,000 and prices came down considerably.
Yeah. What a lot of people hang their hat on the doom and gloom channels is, 2000, everybody pivots around the 2008, 2010 crash, but nobody really explains, they don't go into detail to explain why it happened. I can condense it real quick for those, if you're interested in the truth out there, folks, here's basically what happened. Back in 2000, right about 2000, the administration, the president at that time and everybody, they're like, okay, everybody should own a house. So they started coming up with very low down payment programs and all this other stuff. Subprime mortgages were always there. But then they started getting in vogue because it was like, hey guys, we have this program. If you have pretty good credit, you don't need to validate or verify your income, and we'll do 100% financing for you. And to kick it off, you can get into a house. We're going to give you an interest-only payment for 3 years. We're going to give you this rate that's 3% under market rates. So your payment's very much affordable. So you can buy this big house that you otherwise wouldn't have qualified for, and your payment's probably going to be lower than your rent. So then when we fast forward that a couple years, then here's what starts happening. The interest-only payment goes away. So now you're going to add another $400 or $500 to your payment because you're adding principal to it. Then the teaser rate goes away. So you go from 5 or 4% to 5% to 6%, then the 7%. And so now your payments double and in some cases triple. Well, the market stagnated at that time. And people were trying to refinance and refinance and refinance. All of a sudden, the market stagnated. So people couldn't refinance to get into another teaser rate program.
Yep.
So they were stuck. So now all of a sudden, they're looking at their mortgage statement, and every month it's going up. And now their mortgage payments double or triple what it was when they bought. And they're like, oh, sheesh, I can't refinance. I better sell this thing because I'll never be able to afford it. So they flood the market with millions of homes. Everybody that had a subprime mortgage basically got their payments doubled and tripled, and they couldn't refinance anymore. And they started facing either you make that double payment, or you go into foreclosure, or you sell the house. Well, a lot of people decided to sell, didn't sell. Then they went into foreclosure. Then you start getting short sales because the market's plummeting in prices. So a short sale is, let's say, for example, you owe $300,000 on your house, and then you find out from your realtor that the house is only worth $200,000. Well, you're like, well, I can't pay $300,000. It's not worth $300,000. Nobody's going to buy $300,000. So what do I do? That's called a short sale. You go to the bank and say, hey, I don't have any money. You can have the house. The house will sell for 200. Would you allow the $200,000 basically to satisfy my debt? That's what's called a short sale. And the banks were kind of, at first, I don't know, you probably remember these. Yeah. They sat on the sidelines for years, these short sale pieces, and the market just kept plummeting and plummeting and plummeting. That's what happened. So in this market, subprime's gone. A few percentage of the people have even adjustable rates. So if you have a mortgage or a house now, you got a 3 or 4% interest rate. It's a fixed rate. The payments aren't going to move. So then the people come back and say, well, your taxes are going up and your insurance is going up. Well, yeah, but it's not going up 2 or 3-fold of my payments. My house payment might go up $200-300 a month. Hey, $200-300 is $200-300, but it's not doubling and tripling. So there's no correlation between 2008 and 10 and now, other than house prices really went up. So, but everybody keeps pivoting around that thing where, well, see, prices they were up 50%, so they came down 100%. Well, no, that's not a good argument. So that's where I try to go to these channels and say, guys, I wish you would at least give the people the truth, of what happened.
Yeah, those loans aren't even legal now.
Yeah. And quit using the 2008, 2010 as your pivot point just to say, oh, see, house prices can go down 50%. Well, yeah. But if you're in Austin over the last 10 years, you saw your house prices go up 200%. So, you have to also give the good with the bad. You can't just keep pushing fear. And that's what a lot of channels do.
Yeah. And I think, it's just important, no matter what you're looking at, to just understand where inventory is, understand where the demand is, and then see which one of those you think are going to move and why. And that's as simple as it gets. And affordability, if it's not affordable, then sales go down. Right now, it's not very affordable, and sales are at a record low in Arizona, not across the country. So yeah, that's where we're sitting. And if there's anybody out there that wants to get a consultation about, what can I afford? Do I even think I can get into housing? What kind of products have you got? There's a link below. It says get financing in all 50 states. And, Dan's group be happy to answer your questions and see what he can do for you. They may end up saying, well, based on your income, based on the price of housing in your location, here's what needs to change. And we can get that done in 18 months, 6 months, a couple of years. But, you need to know where you're at. Right. And then I want to circle back with you, Dan, and talk to you about the latest thing out there. And that's all these lawsuits that these brokerages are settling with the, like Remax settled for $55 million. And what that means, is it a big nothing burger for the industry, or how's it going to shake out? I kind of want to do a little deep dive with you on that. And so, put on your thinking cap and we'll get
okay. I was reading some of the article today on the Remax situation. If you could just kind of clarify, it looks like, was it commissions or something was?
Well, there's a big class action lawsuit out there. I'll touch on it here really quick. And it's basically, here it is in a nutshell. It says the two lawsuits take aim at National Association of Realtors participation rule, which requires listing agents to make a blanket offer of compensation to buyer's agents in order to list the property on a realtor-affiliated multiple listing service. According to the plaintiffs, commission sharing inflates the cost for consumers in violation of the Sherman Antitrust Act. NAR comes back and contends that the current commission structure, which has been in place for over 100 years, actually helps consumers. Now, for some reason, these brokerages are settling it to keep the damages from increasing. Yeah. And I don't know why they're settling, because the requirement in an MLS that you have to include some type of compensation for a buyer's agent was removed in the Pacific Northwest. So you don't have to pay a buyer's agent a commission to bring you a buyer. You can put, in fact, in Arizona, you can list that to meet that requirement. You can list a buyer's agent's commission for $1. Okay. So it's, you know, it's 2.5%, 3%. The reason it's 2.5% and 3% is, let's say nobody in Arizona was paying a buyer's agent a commission to bring them a buyer, right? You just went directly to the seller, you negotiated it. But then there's that one house that says, you know, I wonder how much attention I'd get if I offered a buyer's agent 1%. Well, you'd get more, right? What if I went to 2%? What if I went to 3%? Well, what happened was some of these brokerages in their training and in their videos, kind of the smoking gun, were coaching their agents to say to the buyers, this doesn't cost you anything. My work for free is free. Well, it's not, because it's financed into your loan. You know, the price is the price, right? The other thing they're saying, they're telling sellers, look, you need to offer some type of compensation to the buyer's agent. And because if you don't, nobody's going to show your home. Well, that's called steering, and that's illegal. So that's why they're coming after them and saying, you know, they come out and say, no, we don't, you can offer any commission you want, but in their internal training, they're not saying that. They're coaching and saying, you need to kick that up a notch in order to be competitive.
It always scares me when the administrations get involved, because they have an agenda. And many times they don't think it all the way through. It's like a couple months ago when they said the Biden administration's penalizing those with good credit for those with less, you know, stellar credit. What happened at that point was, basically, the higher your credit score is and the more money you put down, it didn't benefit you as much as it normally did, because they were trying to subsidize those with less credit and less money down. In some situations, I'm a proponent of, you know, what's good for everything's good for everybody. Many times I'm not that way. You know, if you're reckless on your life and your money and your credit and everything else, why should I have to pay it for it? It's kind of like reverts us back to like that student loan debt. You know, every semester that you went to college, you had to sit there and re-sign your paperwork for that student loan debt. You signed it. You went to the classes. You took the classes. Well, hopefully you took the classes and passed and everything. So why should the taxpayer now bear that burden on that? So, but getting back to yours, they did that in the mortgage business years and years and years ago, where it used to be, you know, we could charge basically anything we wanted as a fee. Now it's capped. You cannot exceed 3% in all the costs. That put a ton of people out of business, but you know, the stronger survived. But again, it's you're kind of manipulating the system to a point, you know. And we also talk about gas and other products too. You know, why is there not caps on everything? So when you start putting caps on things, you're going to have winners and losers.
And I agree with you. And I also think, you know, as you're seeing the headlines here that, you know, that they're settling, and, you know, buyers agents are going to go away. Really? Are you going to buy a $600,000 house with no assistance at all? Or are you going to, you know, throw yourself to the wind and just work with a listing agent? In a lot of cases, that would work. That wouldn't be a problem. Puts a little more pressure on the listing agent, makes negotiations a little tougher, but you know, they certainly do it in a lot of countries. In fact, I looked it up and I got a sheet to show you, you know, next time we meet, that, you know, here's how New Zealand does it. Here's how Thailand does it. And so, but to think that in our market, the buyer's agents are going to go away, that's not what this settlement and these lawsuits are going to do. All it's doing is, I think it's kind of stating the obvious. It's saying you can't require sellers to pay a buyer's agent. All right, cool. Buyers, if somebody wants to see the house, you got to go. You got to show it to them. You know, that. Like it or not, some agents are going to go, I feel a cold coming on.
Yeah.
So, you know, because I'm only getting $1. It's market forces are going to tell sellers that they better offer something, whether it's 3% or 0.5%. You're just taking that requirement out and saying, go list your house, and at any point at the beginning of the listing presentation with your agent, he sits down and says, here's what I charge, 3% to list. And my recommendation is to pay at least 2.5% to a buyer's agent, because competitively, that's what we're seeing going on in the market. Now, before you sign that, you can say, no, I only want to offer 1%. No, I only want to offer $500. You can do that. You're not competing with a requirement. You're competing with the market.
Yeah.
Does that make sense?
Yeah. Here, look at it another way. A seller contracted you to help them sell their house. Okay. So you now have a fiduciary responsibility to sell that house for that person for as much as you can get for it. Right? That's basically your job. The buyer's agent, their job is on the other side. You ever walk down, New York City, everybody's trying to sell you stuff. Well, you don't have to buy or whatever. But my point is, your buyer's agent is on the side to negotiate to the best for you, the buyer. So the lowest price. So if you're just dealing with the selling agent, why would they come back and say, we'll go ahead and cut the price? Because all they did is took the money away from their seller and they reduced their commissions, because ultimately you're paid on the price of the home.
Well, the other argument to that, Dan, too, though, is, do you take an agent with you when you go buy a car off of a lot?
Yeah. Oh, you could do this with everything. And that's what drives me crazy.
So somebody made a comment the other day. It said, boy, Zillow is going to really win in this thing, because, now you can go straight to Zillow. You can look at who's listing the house and you can negotiate with them directly. Well, in order for Zillow to build out that kind of a site and make that work, you have to understand how Zillow makes its money. It makes its money by selling ads to buyer's agents so that they can get leads. That all goes away. Who's going to want a buyer lead if you're not going to get a commission from that?
Right.
Why would I pay Zillow $1,500 a month for a lead that I'm not going to make any money on? So it's going to be a lot of changes. And I think the pendulum's going to swing too far. I think there's going to be some panic. I think you're going to see all kinds of different models out there. You might see buyer's agents doing business on a concierge basis. I charge this much to show you the home. I charge this much to write the contract, negotiate the inspection. That might change. Or in the case of Seattle, nothing changes. They got rid of that requirement a year and a half ago. Hasn't changed a thing.
Yeah. Though people find loopholes. I mean, that's what you would basically be putting half the real estate business out of business if you said, you couldn't actually help people buy homes. So then everybody's going to be fighting for listings, and all you need is listings, because you get a listing, you're ultimately, if somebody's going to buy that house, you're getting full boat on that commission. So it's
going to be an interesting year. And so I'm, and I'll push before I say goodbye here and say, that's why you should watch Dan and I. We're going to tell you what's going on today in the market.
Unfortunately, I'm like you. I tell it as it is. And if the market's complete crap, I'll say, would I buy in Southern California right now? I couldn't buy in Southern California right now. But would I buy, I can't really say my opinion, because I have no plans on moving there. But if I was going to move there, well, most likely my income would be, sufficient for that area. And I told you, I'm a proponent of, I like owning my house over a 10, 15 year period, 20 year period. You're going to win. You're going to have equity in your house. Even if the house, here's what I always say too, if the house price doesn't move at all, period. Let's say you bought a house in 15 years, the house price didn't move $1. You're still building equity every month that you make a payment, because you're paying down the balance that you owe on it. So, now you get tax benefits from owning a house and all this other stuff. I throw all that out the window, especially with the standard deductions that we have today. But that's why I'm a proponent of buy the house, but if you're going to buy a house and you plan on being there 2-3 years, don't buy. Because the commissions you're going to pay, the legal fees you're going to pay, the filing fees you're going to pay, all the state and local government pieces you're going to pay, you'll lose money.
Yeah.
And so I'm not always cheerleading that you should buy a house, but if you have a family, your financials are okay, and if you can afford in this market, it can't really get that much worse because the Federal Reserve can't keep rates as high as they can, and like Rick was saying earlier, now the debt, to service the debt that we have as a society with these, with the rates that we have today, it hurts. So here's another thing that's going to happen, and here's what actually pushed up rates substantially a couple months ago, and it's still hitting us. Is remember the debt ceiling? That scare was what, 2-3 months ago. Everybody's freaking out. The debt ceiling, the debt ceiling, the debt ceiling. Here we are again, right where we were. But what happened during that time frame is the government doesn't stop spending. They continue to spend on credit card, basically, or fictitious money. Then once the debt ceiling lifted, a couple months ago, they then flooded the market with treasuries, to get money from you and me.
So the checking account.
So they sell treasuries, bonds. And so those bonds go out there and now they compete against mortgage bonds. And this is what I talk about on my channel every day, how mortgage bonds are really getting hit right now because we have a flood of corporate bonds hitting the market because people are trying to get money for corporations. We have the government, pumping out trillions of dollars in treasuries. And then you have the mortgage-backed securities market, as well as the Fed is now not buying any more mortgage-backed security bonds. And all those are just bad news for mortgage-backed security bonds, AKA mortgage rates. So that's also another reason why we saw mortgage rates spike about 2 months ago, is when we had that flood of government bonds hitting the market. Once the debt ceiling was, I thought, solved, 2 or 3 months ago. But you might see that again in this cycle. I don't know.
Yeah, let's hope not, because there's just too much competition, too much of a squeeze on mortgage rates, and away you go. So we'll see what happens. But can we just write them a $240,000 check and say, look, here's my portion, leave me out of it?
Well, it's like Social Security, where they're always hitting Social Security too. They're like, Social Security's running out of money. Social Security this, Social Security that, Social Security, and they use it as a political tool. But if you got a job and you make a decent amount of money, check your paychecks every time. You only pay Social Security up until a certain dollar amount. So let's say it's $100,000. It changes every year, and it's a little bit more than that. An easy fix to Social Security is just say, okay, you're going to pay Social Security for every dollar you earn. Okay. Or you're going to pay Social Security up to $250,000. Or you're going to pay it stops at $100,000. You can just open up, the end piece of that and say, no, you're just going to pay Social Security forever. It'll solve Social Security like that. But
you can do two things. You can say, we're going to raise retirement age by 1 year. We're going to take the cap off of, contributions, and voila, you're good.
Yeah.
But they won't touch it.
Yeah. No, because it's a political. You point at me, I point at you. You point at me, I point at you, and it's nuts. Here's a challenge for everybody tonight or tomorrow. If you're bored to death, go on YouTube and just check out. Just type in 1980, 75, whatever. Just pick a year and pull up a presidential debate from the 70s or 80s. Close your eyes, and you'll be like, holy shit, it's the 70s, not the two. They talk about the same stuff. They talk about the Middle East, oil prices, inflation, this, that. It's just repetitive BS over and over and over. That's why you say, me and Rick with the gray hair, we have a lot of experience. We've been through all these cycles. We've been duped 100 times before. So now when we come out with facts, a lot of younger people don't believe us. They're like, oh no, the debt ceilings is real. It's like, guys, it's not real. They can't default. You cannot default, because we would lose our world status. And we can't do that because the whole world would implode.
Hey,
so
before we go, Danila's got great comments here. Danila Ice, by the way, I love that YouTube name. He goes, the lawsuits seem to be focused on sellers getting some sort of compensation for the fact that they had to pay the buyer's agent, but the amount the seller paid to the buyer's agent was included in the price of the home. So would it not make more sense that compensation as a result of the lawsuit should arguably go to the buyers instead of the sellers? Because who's actually still making the payment on that commission? It's the buyer, right?
Yeah.
So are you compensating the right person in this lawsuit? excellent point. That's what makes this thing so sticky. And to say that the seller had to pay that, no, they didn't.
Why
They
didn't you
didn't.
just say you're paying the selling agent whatever at 5, 10, 15%, 6%, whatever. And then, then in the negotiations or in the contract or whatever, they're actually giving up their piece of their compensation, and they're paying that part of it to the buying agent. You follow me on that one?
Yeah.
It's their money. It's like if I wanted to pay you, like I got a commission check because we closed a borrower that you might have helped me with, and that's probably a bad example because of whatever. But I should be able to say, okay, well, here's the money that I earn, or here's half the money I earned on it because you helped me with this transaction. Otherwise, I wouldn't have gotten the transaction. Or even in the contract, just say we're charging you 5%, 2.5 is going to me, and 2.5 is going to the buying agent. And there's no person out there that's going to not take that because they're paying it anyways. They're paying the same percentage. It's just getting divvied out to different parties.
Yeah. And if you got, and the first, people are not surprised by how much the commission is. When I go on a listing appointment, it's always the first question. What is your rate? What do you charge?
Yep.
Now that's some brokerages, they don't let their agents lower that rate at all.
Right.
They go, you're 6%. And so now if that's the case and you don't like it, well, go to another broker. Don't use them. Don't use them. It's there are some flat fee brokerages, flat fee agents. Everything is negotiable in real estate. So, buyers, sellers, you got to quit pretending that you're being manipulated, because all you have to do is just read what you're signing.
Right.
And they said, we're going to charge 3% to list it. We're going to offer 3%. Well, why don't you list it for 2%? And what if we only compensate the buyer agent 2%? What do you think? Now the agent could say, well, it all depends on how we line up competitively, because during 2021, Dan, 2% was pretty much one of the prevailing rates because houses were selling like crazy. That number came down. Ooh, wait, commissions were market driven. Yes. You didn't have to pay 3% anymore. 3% is what you paid. You wanted that buyer's agent to bring those buyers to you. So you're throwing out carrots. I listed a home once for 1%, Dan. You know what I offered for a buyer's commission for a test? 5. Did I get more buyers? No, because the agents thought I'd made a mistake. I said, did you see the compensation? Oh, I thought that was a mistake. But as a test, it says that people don't pay any attention to that stuff. Now, if you put on there that you're only going to pay me $1 commission to bring you a buyer, by law, I can't say, no, I'm not going to show you the home. I can go to my buyer and I can have a buyer's broker agreement that says, in the event of no commissions being paid, here's my fee. I charge, whatever. And so there's always that, but it's just going to be really bizarre to watch. The trial starts October 16th. It's a big one.
Who brought up the lawsuit?
NAR,
who's getting, I guess, who are they saying in this transaction is getting hurt?
They're all sellers. Sellers are saying that they ended up paying money that they didn't have to, and they want that back.
So they agreed
$15,000. And so they're going to compensate every seller that participated in this class action lawsuit.
So they went in and they signed an agreement that they're willing to pay, let's say, we'll go back to this old standard, 6% commission.
Yeah.
So 3% of that went to the buyer's agent, 3% went to the seller's agent. Okay.
Yep.
You get where I'm going with this?
Yeah,
so they paid
the
6%. Who cares how it's been divvied out? So it goes back to, everybody keeps arguing, well, I didn't know, I didn't understand, but you signed it. You should have read the contract and signed it. Going back, AKA student loan debt. I know I'm going to tick off a lot of people because of this. But every semester before you went to school, you had to sit there and analyze that student loan debt. Do you want to get into this debt to take those classes? So hopefully you can get a better job at the end of this thing. Now, if you got duped by the college, sue the college. I did no complaints with that because my kids went to school. Half the classes are BS. The other halves are taught by professors, assistants, and so forth. So if you think you got duped by the school, sue the school. If it's the paperwork, well, then sue the government because they're the ones that created the student loan, debt paperwork. So you get where I'm getting. I don't mean to keep going back to the student loan debt. It's everybody's a victim. And it's, there are victims out there. I'm not saying that, but everybody's trying to get out of, anything and everything they can. And that ultimately you go back to that debt calculation you had. Yeah. And that's why that ticker keeps going up and up and up and up by the thousands per second.
Well, Dan, good to see you again.
Hey, same here, buddy.
Let's do it again soon. Maybe how about next week?
You bet. You're back in town. I'm always here, and I'm tired as all get out. We are really busy, to be honest with you. That's why a lot of times it really frustrates me when you like Nick. I think you quoted Nick the other day. He's Las Vegas is going to drop 60%. You know who I'm talking about. Why? The first thing I come up with, why? I'd love to know why. We could share it with everybody, because if it's dropping 60%, and I own a property out there, I'd be selling right now. But you have to answer that question, why? And
we'll just continue to wait.
Yep. So that's what Rick and I will do on a weekly basis. We'll answer the whys to all your questions.
All right. Have a good one, Dan.
All right. Thanks, buddy.
See ya.
Take it easy. See you next time.